Well, stocks mixed ahead of the closing bell as investors assess more tariff policy shifts from President Donald Trump. For more on how to be positioned amid the uncertainty, let's welcome in Lesley Marks, Mackenzie Investments Chief Investment Officer of Equities. Lesley, thanks for being here. As you know, it is difficult to figure out what is going to happen, right? We get these tariff announcements. The Canada and Mexico ones were delayed. It looks like the aluminum and steel ones are going into effect. It looks like the China ones are going to go into effect as far as we know. If you are focusing and trying to play all of this, what do you do in the short term? How do you sort of navigate?
Well, thank you, first of all, for having me here this afternoon. And I think you hit on the most important point, which is that the tariff news is creating a bit of uncertainty. It's introducing uncertainty into the market for investors. And so whenever there are things that are sort of unpredictable or uncertain, I think we have to factor that into how we're positioned in our investment portfolios, whether that's through the fixed income side or the equity side. You have to take into account the fact that there is more risk over the investable time horizon than there was before we were talking about tariffs.
Lesley, it does seem like, listen, there's a lot of hot talk coming out of White House and Washington, but it broadly has felt like, Lesley, investors are kind of willing to look through that. I'm not sure why that is. Maybe that's because, Lesley, they see it as headlines, and to your degree, you're ratcheting up uncertainty, but ultimately they say, listen, the U.S. economy is doing well. Jay Powell just said that again today before our lawmakers, and maybe that's what they stay focused on. The economy's doing well, labor market looks broadly solid, earnings are growing.
I think that the observation that the U.S. economy is doing well is an accurate one. I think where there's a bit of a flaw in the thinking is the looking through the tariffs. And I think, I've actually thought about this quite a bit. And I think where this comes from is that we've seen a lot of false starts when it comes to tariffs. So there certainly is a strong view that this is a negotiating tactic and that we won't actually see the tariffs that are coming out in these latest announcements, because that's sort of been the experience over the last 3 or 4 weeks. And that was the experience in President Trump's first term. But I think that's flawed logic. And the reason I think that is because I think it's really important to think the connection to, why the tariffs. The tariffs really have two motives. One is to help finance future corporate tax cuts. But the second is really to result in a change of behavior that ends up landing a greater manufacturing economy in the United States. So without actually implementing any tariffs, it's going to be very hard to accomplish both of those goals for the administration. So I think investors do need to start to think that realistically there is going to be some level of tariffs, and that should be incorporated into their expectations when they're positioning portfolios.
Lesley, what do you think is most exposed across equities?
Well, I think the manufacturing sector in the short term is probably one that is most exposed, in the sense that any company that is relying on imports from other countries as feedstock for their manufacturing operation will be very much exposed in the near term. There's no realistic way over a short period of time that you can reorient your supply chain domestically. And if you just take the tariffs that were announced yesterday on aluminum and steel, for example, we've already heard from the automotive companies about the importance of tariffs to their industry and how devastating that could be. Now, certainly in the long term, if you have, a 3 to 5 year time horizon, yes, we can think about building new aluminum smelters in the United States, but that is not a problem that can be solved in the next 3 to 5 months, 3 to 5 weeks, or 3 to 5 minutes. And so the short term is where we see a lot of uncertainty around supply chains and will have immediate impact on pricing.
So Lesley, let's say I'm a viewer, I'm listening to this right now, I'm an investor, I say, okay, I want to be in those sectors that are least impacted by tariffs. What would those sectors be, Lesley?
Yeah, so I think I would start in the services sector because the services sector is not really targeted when it comes to tariffs, and so I think investors will do better on the services side. And let's take it back to one of your earlier comments around the strength in the U.S. economy, and even the global economy is doing pretty well as well. So I think in the services sector, in hospitality, information technology, you could still see those stocks do well. They're really going to benefit from the strong economy that we've seen to date.
Lesley, great to have you on the show today. Thanks for your time. Appreciate it.
Thanks for having me.